more heart palpitations with the stock market today. Lots of ups and downs this week, last week, beyond. This is what the stock market looks right now. There, just about 20 or so minutes until market close, down some 300 points. Did dip down more than 400 into the red earlier on today as we're continuing to follow it. Lots of ups and downs, like I said. Lots of good days, but also substantial bad days. Let's be joined right now by Barron's senior markets reporter, Paul LaMonica. Thank you so much for joining us here on Live Now from Fox. A lot of red today. What startled investors? What were the main movers?
Yeah, I think, Andy, that investors are a little nervous about earnings. The report cards that we get from companies every quarter. And in this particular case, Netflix, a very popular high-flying stock, their results weren't awful, but they were below forecast. And I think for investors, that was enough to really send shares of Netflix lower. Mattel, the toy-making company, another company that results and guidance were a little bit subpar. So you're seeing that stock slip as well. And, this is a market that has gone from the depths of the sell-off in April after Liberation Day to roaring back to all-time highs because of excitement about the tariffs may not be as bad as we feared. Earnings growth is still decent. The economy's chugging along and the Fed is going to be cutting interest rates. So right now, the pendulum has swung a little bit more to the negative side than the positive side because of these Netflix earnings and other results from corporate America.
Yeah, they keep coming back and forth. Netflix, you mentioned, also Tesla, Texas Instruments among them. How has the tech industry fared? Are they in similar places that Netflix is?
Yeah, the tech sector is one of the biggest drags on the market today, down about 2% or so for a leading fund that tracks big tech companies like Apple and Broadcom and NVIDIA. Small cap companies, which are the types of companies that are much less of an exposure to international economics. They do a lot of their business here in the U.S. Those companies are getting hit as well. And many smaller companies have been big beneficiaries of this market surge in the past few months because there's been that hope that the U.S. economy is going to hold up thanks to stimulus from the federal government whenever the federal government opens again, as well as rate cuts from the Federal Reserve.
Yeah, we talk about it, the health of the economy, the success of the stock market. It also doesn't necessarily always dictate to what we see with NVIDIA, the major companies. How much are the small caps kind of an indicator of anything, and obviously the health of the U.S. economy? What are you monitoring there?
Yeah, I think it's very important for investors not to overlook the Russell 2000 index, for example, which has many of the leading smaller companies in the United States, because their health really does dictate what the average U.S. economy is doing. It's not just the trillion-dollar companies like NVIDIA and Microsoft and Apple and Broadcom. You've got many consumer companies and financial services, small regional community banks. They're in the Russell 2000. So some might argue that they paint a better picture of the health of the domestic economy. An index like the S&P 500 and the Dow, that obviously gives you more of a mix and view of what's happening globally.
Yeah, that is a very good point. You mentioned the tech earnings, Netflix. Is there anything out there the next couple of days, the next couple of weeks that you are paying attention to that everyone else should be aware of?
Yeah, you mentioned Tesla. They're going to be reporting after the close tonight. IBM as well. And IBM, it's an example of a legacy, quote unquote, old tech company that investors have fallen in love with again, thanks to AI, thanks to cloud computing. So I think it's going to be important to see if IBM, which is in the Dow, if they can report some good results. Maybe Tesla and IBM could turn sentiment around for tomorrow morning, but we'll know in a very short period of time, both of them reporting after the market closes at 4:30 Eastern.
Yeah, and obviously some of the future markets will have their way with it initially. I want to talk to you about it because we see some of the good days be really good, but some of the bad days be really bad. If IBM, if Tesla, they come back poor, do people overreact? Is that something you're seeing more common now, at least in this instance?
I think that the reactions that we've seen lately in the market haven't been that much of an overreaction because you always have to put into context that we had a market that rallied so aggressively from the lows in April. So it's not unreasonable for there to be a pullback when you have a stock or a company that a lot of people on Wall Street like to use the phrase priced for perfection. So a company can report good results, but if they're just not good enough, the stock goes down. And that doesn't necessarily mean that all of a sudden the company's fundamentals have changed and you got to fire the CEO and change the corporate strategy. It's just that stocks that go up very sharply over a couple of months could be vulnerable for a pullback if the news isn't perfect.
Yeah, sometimes it's not as bad as it seems, or on the reverse,
Exactly.
as good as it seems. Paul, anything else you'd like to note? Anything else that is moving the market in a way that you're obviously reporting on?
Yeah, I think a big key data point, because it's actual government data that everyone is waiting for, is Friday when we get the delayed consumer price index report, which will give us a better sense of what inflation is looking like. Remember, Andy, we haven't had much in the way of anything of economic data over the past month or so. It's all really been private sources as opposed to the official government data. A lot of people want to see if inflation is continuing to pick up, and if it is that because of tariffs? Is inflation finally starting to cool? What that number and those numbers say will probably help dictate what the Federal Reserve does. They're probably going to cut interest rates again later this month. What happens in December? Do they cut again in December? And how many times will they cut in 2026, especially when there'll be a new Fed chair in place later next year?
Yeah, that's a very good point. And my last question, Paul, before I let you go, because you mentioned that consumer price, the inflation kind of data that is so reliant on. Do people trust those numbers? Because we've seen some concern with the Bureau of Labor Statistics, other numbers out there, the government shutdown, obviously pushing this back. Is there concern about this, whatever the number may be, if it's truly accurate?
Yeah, I think there are always going to be some conspiracy theorists out there in particular that question the validity of the data, whether or not it looks too strong or too weak. But the bottom line is that this is the United States. The economic numbers that our government reports are clearly of higher quality and integrity than what people sometimes worry about from emerging markets. There are always questions about China and how controlled their economy is, and maybe some of the numbers aren't to be trusted as much. There's always going to be questions, I think, about government data, regardless of who's in the White House, who's controlling Congress. But it's the best, it's what we have, and I think that's what central bankers and investors and consumers are going to rely on, and they'll have to.
Yeah, that is so very true, and obviously just so very important. That data will really move the market, and everyone kind of looking for that edge to earn some money or cut losses in any way. All right, Paul, thank you so much. I appreciate your time here on Live Now.
Thanks, Andy. Appreciate it.